I have an order to buy above this bull bar, seeing it as double bottom, second entry buy. This buy didn't trigger, but so many good bull bars here and a huge gap down. So I think if we trigger the buy, I think we're going to head closer to the moving average. And yesterday, I only took, oh, it doesn't show my trades anymore, but I I bought above here thinking that it actually wasn't a gap down, so I'm not sure why it's showing a gap down. Yeah, it looked like this. So I bought above bar 7, and I thought that each one of these um, lines on the grid were 1 point, but they're actually 2 points. So I ended up sizing a little bit bigger than I wanted to. I tried to risk $40, but I ended up risking 80. Um, and once I lost that, I I didn't want to take too much of a risk on other trades because I'm pretty close to my max drawdown. So I didn't take another trade until um, here. I bought above 57 and exited break even on 60. Or I actually lost 2 ticks or 3 ticks or something like that. So not a great day yesterday, and hoping for something better today. This is a pretty go-to setup for me. So I feel confident with it regardless of what happens. And I also sized in so that I was risking $100 on it. Today is similar to this situation last month. We had a buy above bar 3. It triggered on the micros. We also had an II buy above bar 5, which triggered on the E-mini. And we got to a new low, but because of the massive gap down, we just formed a double bottom and then rallied. So I got stopped out below here. I'm going to try to be a little bit more aggressive. If it stops me out and we get another reversal up, I'll be more aggressive with the buy. So it's possible that this stops me out. But I think even if it does and it's not a massive breakdown, I think there'll be buyers somewhere down here. So I don't want to miss that this time. I also don't have much capital to play with. So if I lose one more trade today, I think that might be the end for this account. Even though I'm essentially break even from when I started. We got stopped out there. Lost $115. I'll see if we reverse back up and then buy again. But obviously, kind of frustrating to have your stop at the low tick. That's so brutal. I think based on the last 2 times, it might be okay. It might be better for me to just have a slightly wider stop, like half the range or something. Because like this doesn't make sense for me to do. Like knowing that we're gonna bounce, but not being prepared for it. Not knowing, but like there's a good chance that even if we fall below here, we're still too overextended to the downside. So I'm stopping out somewhere where I would never sell. Um, that makes me feel like I should trade a little bit smaller and just use a slightly bigger stop. So half of this range, which would be in this case 8 points maybe. So have my stop down here and allow for it to break below this. And in this example, allow for it to have a failed breakdown and not worry about getting stopped out in the low tick. And I think significantly increased probability. And if not to hold for a swing up even after it comes down here, but at least to have more leeway into managing the trade correctly. So here in this case, if I didn't stop out, I could decide that this is disappointing enough and look to exit with a small loss. But at least I don't take a loss like today and the other example right at the bottom of the trading range where we're likely going to bounce. Just bought again above this bull bar, failed breakdown, and big tail on the bottom, closing near the high. So I bought above there, looking for a test of the moving average and the current high of day. So I lost the difference between my stop out and this new entry. Had I used a wide stop, I would still be long from here and potentially buy more here if I traded half size. So I think as long as I'm willing to re-enter, um, I don't necessarily need to use a wide stop. But in these kind of big gap down situations, I think it's something worth considering. Because if I trade half size here with a wide stop, maybe 8 points down below the low, then I can buy above here and be willing to buy more down here, either with a limit order or above a second reversal. And if we don't drop and we instead get another bull bar closing up here, then I can add the other half on above that. So I think there's an opportunity to be a little bit more creative with that and not worry about getting stopped out when I think there's going to be buyers down here. And this bar just got up one tick below the buy signal, so probably letting bulls out. So if I had a wide stop, I think there's a lot more options that I can choose from on how to manage the trade. I think I'll give it one more bar. If this bar is bad, then I'll look to exit break even. But if this bar closes near its high or goes outside up, then I'll look to exit near the moving average. If I get stopped out here, I'll be pretty much done. I'll have like $5 left before hitting max drawdown. So this might be my last trade if I get stopped out. I'm gonna try to get out at the high of this bar. Looks like it's gonna close as a decent sized bear body. So, or close with a decent sized bear body. So I'll look for a bounce up to my entry and look to get out there. Well, it looks like I'll get stopped out here. And turns out the wide stop, well, at least for now, it looks like the wide stop may have just been useful to manage out of the trade, either get out break even or exit at the initial entry. So not looking very strong, but it still seems that having the ability to buy up here and then buy more down here offers more opportunity to manage the trade. I'm willing to exit with a 5 tick loss. I just put it at the low of this bull bar, which is a bad sell signal for the move down. So if it gets back up there, I'll lose 5 ticks, which I'll be happy with. And that'll at least get me one more trade. I'm interested to see how this plays out today. I feel like there are some lessons here that I need to take from this trade and the other example I showed, and try to find a better approach to these types of trades with big gap downs. And so I just kind of want to see how this plays out and see if the ideas that I have make sense in this context.
Stop field.
Just messed around with the last $10 I had left. I just bought 5 E-minis at this low to see if I could do something with that $10, but obviously not. So it won't update until the end of day, but my max drawdown limit was 49,808. So after that last trade on the E-mini, on the micros, I was at 49,816 or something. So I had like $8 or $10 left, which I can't really do anything with. So I guess I should just close this out because it doesn't matter anymore. So actually, let me see if I can show my dashboard. I think that will. Let me see if I can find it. So this is from yesterday. It says my max drawdown is at 49,805, and I was at 49,816. So it's pretty much done. So it says here, do not allow your account balance to go below $49,805.90. So that's the max drawdown. All right, so I'm going to be done there for the day, and done till next week, until Monday. I think I'm going to do this again. I think there's an arbitrage opportunity up to 10 months of doing it, just because it's about 160 per month, maybe a little bit more than 10 months. It's about 160 per month US. So I think that's close to $200 Canadian. And once you get funded, you get a $2,000 real money drawdown. So it's like paying $2,000 in fees to get $2,000 in real money drawdown. So I think as long as it's under 10 months, I think I think it's worth it to do it. So, and also I don't want to stop after one time. I think like I pretty much, obviously with what I did at the end, it messed it up, but I was pretty much break even. So I just had a really, really bad slump at the end. I think it's worth it to give it another shot. If I think I started April 4th, May, June. So it's been a little bit over 2 months. So I might try twice more to see if it's worth it. And then try to take the lessons from this time around and try to be better next time.